Welcome to the Professional Edge. My name's Sean Todd, tax attorney, CPA, and certified financial planner, host here on the Professional Edge for going on north of 5 years. I appreciate you listening in, and we have an interesting topic this week, and it's going to be cleanup on aisle 5. When we're at Walmart or Publix or Kroger and we hear this cleanup on aisle 5, that means something has happened and there is a mess. So what we're going to try and do is focus on something that resonates with everyone, and that is to prevent this mess from happening, and therefore we don't have to call on cleanup on aisle 5. So before we get started, I want to tune your attention to the website emcthebundle.com. That is Echo Mary Charlie thebundle.com, and that's one way to get this cleanup on aisle 5 started, and that is where you get your estate plan done. We're already into the month of September 2024. We're approaching that last quarter, and your New Year's resolution was, hey, I'm going to get my estate plan done, but you've still not completed that. So do take a visit. That website again is EMC, Echo Mary Charlie thebundle.com. So let's start with cleanup on aisle 5, number 1, and that is your income taxes. So how do we clean up on aisle 5 your income taxes? Well, we all know that your tax planning is not done when you go to your tax return preparer. That could be Liberty, that could be H&R Block, could be a CPA. So your tax planning is done now throughout the year. So if you have not reviewed your portfolio and captured some tax losses with this volatility we've been experiencing this past week, well, that's cleanup on aisle 5. Let's clean that up. Let's capture some tax losses, and therefore we're going to have those to offset any capital gains or capital gain distributions on your 1099 that you receive from the brokerage firm. So that's cleanup on aisle 5 is let's take a very candid review of your holdings and see if there's any tax losses that we can harvest. Go ahead and put those and make those a tax asset. That way, come tax time for 2024, we can offset your gains and pay the Internal Revenue Service a little bit less money legally. So cleanup on aisle 5 is, do you have any tax losses you should recognize on your taxes for 2024? Next one on your cleanup on aisle 5, staying in that tax planning. Have you made your required minimum distribution for 2024, or are you still a little bit light? Well, one option, if you're charitably inclined, is you can make that required minimum distribution paid directly to the charity, and therefore you would not have to claim that RMD as taxable income. Therefore, your adjusted gross income goes less, and some other threshold amounts, which is determined by your adjusted gross income, also could benefit you in having a higher tax deduction. So there's another item that we need to look at is if you have not fully taken your required minimum distribution, you're charitably inclined, let's go ahead and direct that RMD directly to the charity. It's called a charitable distribution. And therefore, on your 1099 that you receive at the end of the year for your 2024 RMD, which is received roughly February, March of 2025, that will show that you are not going to be taxed on all of your required minimum distributions because you gave part of that directly to charity. Now, the one bite at the apple, which most people don't realize, is when you direct that RMD to the charity, you're not going to get an additional charitable donation deduction on your tax returns. So the Internal Revenue Service doesn't allow you to get 2 bites at the apple. You only get one. Well, on this case, I would be more in inclined to exclude that distribution from my taxable income and therefore fully utilize my standard deduction, which we all know has been greatly increased. Hopefully the sunset provision in 2025 does not come into play, but we would still get the exclusion from income for the amount that we donated to charity. And then we would also be able to capture that large standard deduction. So therefore, that's probably the best strategy for a lot of our listeners here on the Professional Edge. And that way, clean up on aisle 5. We're not claiming that near the end of tax time. So again, like I mentioned earlier, do go to the website EMC, that is Echo Mary Charlie, thebundle.com, to clean up your estate plan. That's number one. Number two, your portfolio, because what we also offer in that bundle is a comprehensive review of your portfolio and then a written recommendation on whether there should be some reallocation, because inside some of those holdings you might have a large turnover, and what that means is they start off with 10 stocks, and if there's 100% turnover by the end of the year, they have 10 different stocks within that mutual fund. That's 100% turnover. Well, when we turn anything over, and as we started off 2024 strong, there's gains within that portfolio. So if they sell them all, then we're going to have some capital gains, and that is going to be your capital gains distribution that comes out on your 1099-R as in Ralph, or your 1099 of your brokerage account statement. So we got to make sure that that is coordinated as well. So we do that as part of that bundle. And then the final thing is your income tax planning, and we basically review your tax return as a tax attorney CPA and give you some helpful hints, just like we got done talking to about the qualified charitable distribution of your required minimum distribution. So we avoid this cleanup on aisle 5. So what's another cleanup on aisle 5 for income tax planning? Well, let's look at it this way. You may have purchased a new iPad. You paid, let's call it $700 for that iPad, and that is a personal expense, and therefore it's not deductible. So if we can move that iPad over and use it in a business, then we're going to be able to deduct that $700 off of your income. And let's say you're getting your business started, you have startup expenses, and you have a total of $5,000 of startup expenses. You incorporate, you do that with Secretary of State, you do some publication, you might have spoke with an attorney for a minute, and you have $5,000 of these business expenses. Can you write those off against your other income, such as interest or a side part-time W-2? The answer is yes. The Internal Revenue Service says if there's an intent to make a profit, that loss can be offset against your W-2 earnings. But if you're in a hobby and you're thinking about collecting some antiques and selling some antiques, and it's not really, something you really focus on, but it's sort of this side hobby. Well, if the Internal Revenue Service is wanting to call this a hobby, then that $5,000 in our example is not going to be able to be used to offset your W-2 or other earnings. So with that in mind, clean up on aisle 5. Let's make sure that you're, quote, in business, and there are some standards to apply to that to make sure that you are in business, and that loss can be used to offset your active or your portfolio income. So again, structuring things properly do help you, because that $5,000, if it's a hobby loss, you're not eligible to take that against your active income. So therefore, it is wasted. But if we convert this hobby to a for-profit business, even though we lost money, we just have to show the intent to make a profit, then we are going to be allowed legally to reduce our W-2 or our other income by this $5,000. So that's pretty significant. Being in, let's say, the 30% bracket, $5,000, that's $1,500 in tax savings. That's why we do tax planning now, to make sure things are structured properly. And let's say you did give my office a call at 877-654-9798. That number again, 877-654-9798. We had a conversation and you said, hey, I'm doing this. I do interior design. Well, okay, that's great. Is it a hobby or is it a business? And you had these expenses, and lo and behold, you answered some questions incorrectly, but I said, okay, during the consult, well, let's structure it this way because we know this is your first year for your interior design business, and you're probably going to expend more than what you make, so we want to be able to use that loss to offset your spouse's W-2 income. Wouldn't that be worth a little bit of your time, and also to structure things properly? Because once you structure it properly, then you can take that loss going forward in subsequent years. So again, give our office a call at 877-654-9798 for some income tax planning advice, so we're not cleaning up on aisle 5. We hear that announcement and we're like, hey, I wonder what happened. What got spilled in aisle 5? So again, my name's Sean Todd, tax attorney, CPA, certified financial planner, host and sponsor of The Professional Edge. Stay tuned. We have more coming up here on The Professional Edge.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Sean Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with Sean, call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Sean Todd is more than qualified as a tax attorney, CPA, and certified financial planner. Sean is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Sean Todd to learn how you can benefit from their multidisciplinary practice where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach Estate Management Counselors and speak with Sean Todd by calling 1-877-654-9798. That's 1-877-654-9798.